Hello, and welcome back to the Wallfacer podcast. Today's guests are DeFi Dad and Nomatic Cap, co-founders of the Edge podcast, the Edge newsletter, angel investors, and well-known educators in the crypto space. Guys, welcome to the show.
Thanks for having us. There we go.
Yeah, my pleasure. It feels very awkward going from our normal banter right before we started to my awkward podcaster intro, but such is the job, I guess. So many people are going to know you guys from the content that you put out, DeFi Dad especially. I mean, you've been making content in the space for so long. I'm curious what got you started doing the content and sort of educational stuff first, and then really how that's informed how you approach angel investing and everything else you do in the space today.
Yeah, there's a lot of luck involved here. So I got into the space in 2017, and I was just trying to learn about Bitcoin and Ethereum. I did not get rich in 2017. I know there's a lot of epic stories for other folks back then, but I got a little bit of crypto exposure, some Bitcoin, some Ether. I held XRP at one time, God forgive me. And my portfolio went up quite a bit in a few months. And that was an inflection point, for me realizing, hey, this is an exciting space. I was actually more drawn into the underlying tech with Bitcoin and Ethereum. I really thought it was as transformative as I believe it to be today, that this can really rebuild the whole finance system. And so anyways, I got into 2018, and then I watched my portfolio go down to a number lower from where I first invested. And I found that I was still just as in love with it. It obviously stunk to see my portfolio go down that much. I think it went down in total, maybe 66% below what I invested. But at one point, whatever I invested was up 3x. So I was down 95% like everyone in 18. And so I ended up going to an Ethereum conference at the end of 2017. I saw Laura Shin there, and I was binging through her podcasts, and I basically just went up to her to tell her how wonderful I thought she was. I really felt like she had a real impact on my life. And she was very, very kind to me. I think she was taken aback because, it was still pretty early on in the space, and we stayed in touch. And to this day, I'd swear Laura changed my life from a content perspective, teaching me about crypto, but she was also kind enough to make some recommendations for me about where I should try to work in the space. She recommended Consensus, and I eventually got a job there. And anyways, getting back to this original question though of content, at some point along the way, working 2 years in a marketing project management type role at Consensus across lots of different teams, I got to interface with teams like MetaMask in the early days and Gitcoin. I started to play with DeFi. We were booking events that were kind of like TED Talks, but for Ethereum builders. As I was booking these guests, it was normal in my previous career, in a sales job, to do research and be prepared to kind of charm them, to convince them to come and speak at the event. So I started with something like Compound or like a Uniswap. And I quickly developed a thesis, probably the first thesis I'd ever come up with in my life, where I knew I'm right and a majority of folks are wrong out there, that DeFi was ready for more adoptions. Anyways, I started tweeting about it. I'm sure I had 100 or 200 followers. And by the end of 2019, DeFi was really starting to roll. I think there was maybe $100 million in the space, between Compound and Uniswap and Maker. For whatever thousands of few hundred people that were listening, it kind of steamrolled then into 2021. And I started making videos and doing, interviews and tutorials. But I think the key in all of this is I really stuck to what I believed in. I never veered from, what was genuinely interesting to me. And I think that was authentic. And we'll talk more about this, but I think that guiding light about sticking to what you really believe in, sticking to your principles, working hard to uphold the integrity in your life, not getting lost in all of the mess of what happens on a crypto Twitter and some of the things that happen in the crypto space. I really found purpose. So I feel very lucky. We'll talk more about kind of this leads to where we are today with the Edge podcast.
Cool. Yeah, I think what I hear from you there at the end is that you never got into meme coin trading and shilling.
No.
Yeah. Yeah, but
No.
Nomatic too. I actually don't know your backstory at all. Would love to also learn how you got here.
Yeah, so my first touch point was with Bitcoin back in 2012, and I was actually, I think it was like early 20s. I was bouncing at a club, and we had like the nerdiest crew of bouncers. They were all like jujitsu nerds that, didn't look that imposing, would absolutely mess you up. But anyways, they all played like Magic the Gathering and D&D, but this one guy was like a computer software engineer by day, bouncer by night, and he started telling me about Bitcoin. And I was just like, what are you talking about? You're mining it? Like, so again, yeah, back in 2012, he's like, you got to come over and see my mining setup. And I went over to his little apartment and went into his house. His wife did this like big eye roll. She's like, oh my God, somebody's coming to look at his stupid, nerdy, computer setup. And he had like 10 stripped down computer towers, just graphics cards, just like mining Bitcoin. And I couldn't like, once I saw that, I couldn't like unsee it. But I couldn't figure out what was going on at the time still. Like it was too abstract for me. And looking back now, this is like just before ASICs kind of wiped out the GPU Bitcoin mining. But anyways, like fast forward 4 years, it's 2016. I'm, making my first Coinbase account, but for whatever reason, I never bought anything. Well, I know why. I was so broke, man. Like I had no disposable like income, and like I had debts, and I was like, this is like, I shouldn't do this. But anyways, 2017 came, and I think a lot of people got swooped up in that rally. And that's actually the same time I found Discord was in 2017. So the combination of like kind of first really understanding crypto and then finding Discord, which meant to me like finding a community of people that were like-minded, was like really powerful. So kind of through like 2018, I started doing like, it basically like the dumbest stuff. Like I was running like Bitcoin fork master nodes and things like that, trying to generate passive income. And then I lost a bit of touch in that in between, sort of like the 2018 to 2020, but got back into DeFi summer and just blown away by what I was seeing with like things like Uniswap. And then funnily enough, so I learned how to get into my first LP from DeFi Dad. It was like a sushi swap LP. And I was watching his little tutorial video, and I had to pause it probably 20 or 30 times to check the UI and make sure I was doing the step properly. And then I was also praying that this video that he made, like they hadn't changed the UI and I wasn't going to get lost somewhere in the process, because it was pretty convoluted back then. But anyways, the funny thing too is, so this guy taught me, sorry, excuse me, how to ape into an LP. And then he put out a tweet kind of back in, I think 2021, about, just looking for somebody to help invest with. And we kind of got in touch and became friends. And now we're here talking to you, Ryan.
I forget about this. It's funny to hear it because we do 2 to 3 episodes a week through the Edge podcast, and yeah, I just like totally forget like these origin stories. Nomatic, wouldn't you say like the uniting force across all these like different stories, which again, everyone's got like a very similar but unique origin story. There's like this moment where you realize you're like, hey, these people are so much like me. Like I really have always felt like I am a very type A personality. I have, I was like a good student in school. I played sports. I had lots of friends always. It's nothing like I felt out of place, but I always felt like I really struggled to meet people who thought as deeply about the way the world was working, and that like there was a better way forward, but also like wanting real financial incentives behind this. We all heard these amazing stories about tech startups, but I lived in the Bay Area, and I saw the reality of that like most people work in crappy little startups and they get taken advantage of. They work on a team and get underpaid, and it doesn't lead to some like amazing IPO, but tokens like blew my mind, realizing, hey, like you can assign a value to the work you're doing earlier on. Maybe people hyper speculate on that and it overshoots its market value. But yeah, I still remember when I was working in an office, I had a really close friend who was into Ether and Bitcoin in summer 2017. And he was the one, he was literally like every single day in my ear, you need to learn about this. This is like so up your alley. Like you are exactly the type of person who would love this. And I kept basically just laughing at him saying like, what the hell is it? Ethereum? It was such a weird sounding name to me. I looked up Vitalik and was like, it's this goofy, like he's a teenager. He's under 20 years old at the time. And, again, thank God for that person recognizing that like there was like a money standpoint that was going to be interesting, an economic standpoint. The idea of, people maybe make fun of it now because it hasn't totally played out, but I still think it's the end game, banking the unbanked. So, these are really like meaningful. These are really meaningful ways to like create a community and to find people that have common ground. And again, I think like it's like a total joy every day to work with Nomatic. I feel like the luckiest person in the world. So anyways, that's our story.
No, that's very nice. And I think two things you touched on that I'd like to come back to. I do think so. I got into crypto around the same time, 2016, 2017, bought all of the stupid coins, lost a bunch of money in 2018, got excited again, actually almost left the space kind of leading up to DeFi summer, and then got excited again by DeFi. A lot of the same sort of unifying story. And it's something I actually would say that I struggle with a bit today in crypto, which is I feel like at that time, and I don't want to turn this into a Bitcoin episode, but I do feel like there was something different about people whose first touch point was Bitcoin, in that Bitcoin does have this very clear ideology. I mean, I'm not a developer, but I remember when I was getting into the space, I bought Andreas Antonopoulos' book, Understanding Bitcoin, spent the time like really trying to understand what this thing is, why it matters. And I remember at some point, I guess in the last cycle, like 2022-ish timeframe, just like seeing some of the NFT stuff, which I was fine with. I definitely lost money on NFTs. But the philosophy of these people was different. They like skipped over this Bitcoin step, which I feel like for so many people who have been here for a bit longer is this like foundational element of understanding crypto. I'm curious if you guys kind of feel that too. I mean, obviously we all spend most of our time in Ethereum today, but still kind of having that underlying Bitcoin maybe grounding or something.
Yeah, Nomatic, do you want to go on that first? I think the quick summary for me is I think that Bitcoin is like the ABCs, or, it's like it's not even like the addition subtraction. It's even simpler than that of blockchain tech. And so we were all fortunate to come into the space then and to learn about the basics of like, wait, so what would it mean to have peer-to-peer digital cash, and what does it mean ultimately? Now it's more seen as like a digital store of value, but it still can serve the peer-to-peer cash utility, and that was really important in shaping our views. I know all of us probably too like learned more about money in general. Like I never invested. I'm like somewhat embarrassed and also simultaneously proud to say I did not invest in a stock until right around the time I got into crypto. I had a young kid and I was thinking about the fact that like I had ignored finance my whole life. My parents were terrible with finance, and I thought, what the hell? I need to like rethink like my whole life on it. So anyways, just foundationally Bitcoin is Bitcoin, and then we got introduced to Ether, and then you get DeFi. And for anyone coming into the space now, they're like, so I saw this guy on TikTok saying that he bought a meme coin for a few $100s and now it's worth $1 million. And I guess this is the future of finance. Like this, it's kind of gross. But anyways, what do you think, Nomatic?
Yeah, I try not to be preachy or like condescending on this, but Ryan, like you absolutely nail it. There's so much I learned in that early process. Like I was like an infant, with when it comes to like the world of finance and what was actually happening behind the scenes. And once you go down the rabbit hole of Bitcoin and start understanding it, it unveils this curtain of how sort of everything works. And I think most people that see that are sort of appalled, and you can't unsee it. Like it's just crazy. And then the other thing is, I think going through a lot of that stuff is a rite of passage. Like learning how to deal with volatility, understanding the outcomes of your own actions and choices with finance. And they're brutal and they happen quickly, and you become like scarred and hardened very fast in this space. And it's like a trial by fire that I wouldn't give up for anything. I'm glad I went through it. Like DeFi Dad was talking about, drawing down 66% from what he put in. And like that is like shocking. But I mean, you take that with you and you take that forward and you hopefully make better decisions and choices going forward, and you build like a better, stronger foundation. And I think there's just so many things in the early Bitcoin ethos, like you talked about with Andreas, that are just like, man, people should really like learn a lot of those lessons. But yeah, and I still see that stuff in the space, and I do my absolute best not to be too cynical, and I try to look at the good. And I'm like an eternal optimist with anything. So I try to focus on what is inspiring me and try to like block out what isn't. And yeah, I never really got into the meme coin stuff. But anyways, yeah, I'll leave it there. But yeah.
Yeah, and so the other thing that you guys had mentioned earlier is kind of how DeFi, I think, was really this moment that was what really got you excited about the space, right? There was the initial moment, and then there was the kind of defining who you are today. And I think DeFi has been that kind of for all of us. I want to come back to that, but I do just want to come back to the Bitcoin sort of hierarchy of ideology. It's interesting because, obviously that extends to Ethereum as well, right? Vitalik wrote for Bitcoin Magazine. A lot of the Bitcoin ethos does live within Ethereum, even if Bitcoiners might deny that. And as I think about crypto today, maybe beyond Ethereum, I think that ideology maybe is not there, right? There's much more of the race for performance, which there's nothing wrong with. If anything, it's kind of the more modern, Silicon Valley approach to building blockchain networks. And that certainly is what's working today as well, right? Hyperliquid makes lots of trade-offs of what would be a Bitcoiner ideology for super high performance. I'm curious where you net out on that, what I'd call like the modern state of the industry there. I believe you're both pretty bullish and excited about Hyperliquid. Yeah, riff on that a bit, I guess.
Hi, this is Ryan, host of the Wallfacer podcast. I want to tell you about our latest product that we think will change how you interact with DeFi. Managing DeFi positions across protocols is complicated. That's why we built Vaults.fyi, a single, clean interface for accessing top protocols like Aave, Compound, Morpho, Euler, Lido, and many more across major networks. No wrappers, no extra contracts, just direct access to the best yields with real-time analytics. If you've gotten any value from this podcast, please try it out at vaults.fyi. The link's in the podcast description, and my DMs are open on X and Farcaster. I read every piece of feedback. Now, back to the show.
Yes, so I am very bullish on the spectrum of different approaches here. And so let's start with Bitcoin. Bitcoin has always been notably difficult to change. That's been viewed as one of its greatest strengths. It's incredibly reliable. I mean, it's the most reliable. Like, let's be clear, it's the network that hasn't gone down for the longest amount of time, blockchain network that has the most uptime, the longest uptime. It's viewed as truly uncensorable. And the whole flywheel of how like Bitcoin works has like proven itself over the longest time frame. So like that's incredible for this like digital gold use case. Maybe the caveat that I'll make there is I think that they have an issue with some of the loudest voices in the room have advocated for holding Bitcoin with custodians, holding it through an ETF. And it like absolutely goes against the grain of like what Bitcoin is supposed to be and like where it derives its value. But it's also a sign of like the whole industry just matured, and like we don't expect the largest capital allocators in the world to like be using ledgers and putting them into safe somewhere. So this is all a sign of maturity. Yes, I do think they've sort of lost their way a bit. Like the community has it doesn't have the touch points that we all felt. Like you really, let's be clear, like Bitcoin is as much a religion as it is a technology. Then you have Ethereum, which I think has stuck to its principles more than any other ecosystem. And this is one of it should be one of its greatest strengths, but it's like smashed between Bitcoin, its big brother, and then every other L1 out there. And so Ethereum, probably its greatest strength right now is its uptime. The fact that it is viewed then as uncensorable. There's a lot of arguments that folks will have about how much decentralization is enough. But I can tell you the scoreboard clearly says that the biggest capital allocators are trusting Ethereum. Like the largest amount of money in terms of stable coins and all the other RWAs is sitting on Ethereum by a huge mile. So like this is, again, moving through this spectrum. And then we have newer L1s that have compromised on, let's say, security, decentralization, because they want greater performance, greater throughput. And so I think Solana pioneered that approach. I was absolutely critical of it from day one, and I hold Sol now because I absolutely believe that like they've had a breakthrough. They're here to stay. there's just like zero question, will Solana be around in my mind in 10 years? You've got Bitcoin, then Ethereum, I'm second most confident it will be around. And then there's Solana. And then the next one, and I'm going to let Nomatic touch more on Hyperliquid among these. Hyperliquid is really giving users like everything they want as a trader. But I personally like lose sleep over the security of those assets in their bridge. They've really optimized for the best trading experience. But if I asked you, where do you have the greatest guarantee of maintaining control of your assets, being able to access them, knowing that like the network will never be compromised? Yeah, it goes Bitcoin, then Ethereum. Maybe you could make an argument that they're closer to equal there. And then you've got Solana, and then Hyperliquid sits so much further out in terms of like tail risk of something terrible happening. Nomatic knows way more about this. He's the true Hyperliquid degen between the two of us.
Yeah, I think Bitcoin sits on its island kind of all the time. One thing that you mentioned, the difficulty to upgrade Bitcoin is a feature and a bug. And I think I saw Nick Carter talking about this recently. Like, I think it's becoming so hard to do now that it almost blows up the entire community. And there's another block wars debate, or there's a highly contentious fork. So what I think Ethereum has actually threaded the needle on is this like social consensus they've come to with upgrading the network, which I think is such a difficult feat to pull off for a decentralized network like Ethereum and where it sits today. And like, look, the last, call it, I don't know, maybe year and a half has been very tough. But what I've like seen recently just gives me like, I'm just like getting so bullish again on Ethereum. There was a moment to kind of tie this into Hyperliquid. There was a moment, I think, in the darkest times there for Ethereum where I was like, man, like, do I just full port into Hyperliquid here? Like, what am I doing? But the things that like kept me were, hey, where do I feel comfortable with the bulk of my assets still? Ethereum. What is, in my opinion, the most pristine collateral? It is Ethereum to me, because I can borrow against it up to like 92% LTV on things like Fluid. Like, I love Hype, but you're not going to be able to attain that sort of LTV for a while. I like Hyperliquid to me though is, I think they nailed this rollout of their ecosystem, their token. It's like it's much like I've talked about this like immaculate conception moment, kind of like Bitcoin was, or Ethereum. And the thing is, they've created a wealth effect for their community, which I think if you look at the traits of successful ecosystems, they had to create a wealth effect for their users at some point in time. So I really do think they're going to work towards decentralization. And one thing that really annoyed me with the Ethereum ecosystem was I need things quantified. Like, okay, what is sufficient decentralization? Like, are we just going for maximal? Are we trying to lever up to the extreme maximum? Like, we have to look at trade-offs with that as well. And I think they're doing that a much better job of that going forward right now. So I also have my, fears of some security issues with Hyperliquid. But yeah, I mean, I think they're on the right path, and hopefully they continue towards this like path of decentralization.
Also, just to add in with Hyperliquid, one of the things they nailed down that we can verify, knowing the Hyperliquid community, is they've built a cult around it. Each of these chains has its own very unique cult religion around it. Ethereum's cult for the longest time it's what allowed it to continue to build new applications and ultimately find this like escape velocity of being like the number one smart contract platform in the world. But at some point, that same philosophy of being like just super nuanced and like open-minded to every new idea, it eventually caught up with Ethereum in the last like year or two. And I just echoing what Nomatic's saying, I don't think my conviction for Ether has never been challenged so much. Like, I thought 2018, 2019 was bad, but truthfully, like, it was just things were so new and there was truly no use cases beyond like speculating, trading on like a centralized exchange. So then when we get to now, like, you look and you go, man, like, there's so much value here. There's so much utility. And this thing has literally like the worst, most like negative flywheel death spiral going on sentiment wise. So this is something we could probably talk a bit more about, but we really sort of dug our heels in. This is something we talked a lot about. We were like, where is the bottom on this sentiment? It's not just because we're both Ether holders. And again, reminding everyone, like, we're not ICO whales. Like, we've bought it off the open market over many years, like anyone. We've had our ups, we've had our downs, but at some point, you, especially as a content creator, as an educator, ultimately content is a tool for educating. You're thinking, okay, so if we have a thesis for why the market is undervaluing or mispricing Ether, we need to help amplify, the right builders, the right stories, so that others can come to grips with what we're believing behind the scenes. And so, yeah, I think it's been a remarkable 2025 for Ether. I mean, as of today, I think the price is around 2,500. It's like a stable coin pegged to 2,500 over the past month or few months. But I do think Ether ends the year much higher than this. And, I think like an all-time high is finally right around the corner for Ether. It's been painful to not see it reach a new high this cycle yet. But yeah, we're right on the cusp of that.
Well, yeah, God willing. Yeah, I get lots of texts from my friends who I have suggested, buy Bitcoin, buy some Ether. And they're like, well, why did you tell me to buy this thing that goes down or never goes up? But to the point you made earlier, Nomatic, we're putting together some content for the R Network newsletter. And my co-founder, Tyler, was looking at where ETH is held today. And something like 7%, I think, of the total ETH supply is in Aave today, either being used as collateral or for looping strategies across Ether and LSTs and all the ETH derivatives. But, it clearly is a pristine collateral and is something that people are using very widely. Now, how that translates into value capture and getting back to an all-time high is perhaps still TBD. I'm curious how you guys think about that. Obviously, we're seeing, I think you guys have you had someone from the Ethereum Foundation on the show, your show as well? Like, obviously, we're seeing incredible changes there, but what else is getting you guys excited about Ether, the asset?
Yeah, we're going to have Tomas from the Ethereum Foundation, one of the co-directors. So he'll be joining us here in the coming weeks. We had the Etherealize team on. We had Ryan Berkmans, who isn't at EF, but he's a longtime Ethereum investor and a very vocal bull. Okay, so I think the simplest thesis here is that crypto has always been amazing at overcorrecting to the upside, basically over speculating on assets, overshooting their fair market valuation, and then absolutely overcorrecting to the downside. This is a part of every cycle. The 4-year Bitcoin cycle has dictated this. At the end of the day, most of the assets, basically everything's been correlated to Bitcoin. Whether there's been moments where Ether has led, there were moments where Sol led here over the last few years, but everything's ultimately following one of these mega large assets. And Bitcoin is absolutely king of that. So I think that what's been, challenging this cycle is just the fact that Ether never reached its all-time high. That creates a sort of negative sentiment, underlying sentiment around why has it not reached that? No matter how sophisticated or mature we think the market's gotten, I think Sol at $8 is was the buy of the last few years. Anything under $50 was like a gift. And, are you going to be more excited about a platform that is in the hundreds of billions of dollars range that, you're looking at and you're thinking reasonably, this thing based on past cycles could maybe get up to $1 trillion, maybe multiple trillions if we're lucky. And so again, whether you are a professional venture investor or whether you're brand new to the space and you fall into the category of let's call them a retail investor, everyone wants to make money. I think there were just really more appetizing, opportunities there than Ether. Ether and Bitcoin, frankly, are such enormous assets that it's just not that easy. Of course, you need that much more money in order for these to double in value or, go up however many multiples. So just getting out of that negative sort of flywheel with having achieved so much success, having grown so much. Another thing, I'll say a second thing is, for whatever reason, being the little brother to Bitcoin, I think Ether is always held to a fairly unfair standard. We're looking at it through a DCF lens. We're comping it to, a Microsoft. We're comping it to real world businesses. For whatever reason, and again, I'm so proud to be a part of the Ethereum community, but for whatever reason, it has just drawn this really intense criticism because it is such an enormous asset, and it's a pioneer in that space. Meanwhile, every other L1 gets to comp itself to that. Well, if they're worth 200 billion, what do we need to do to just eat up a few percent of its market share and grow that much more? So it's been a privilege for every L1 launch then. And I'm so excited for the market to absolutely just annihilate so many of these L1s. Like, there's so much vaporware out there that deserves to go down 99% and eventually become completely obsolete. And then, so anyways, there's this sort of like being cucked in the middle between Bitcoin and every other L1. And then I'd say the final point here is, I think that Ethereum has a path to just hosting that much more value on chain. Some of the changes that have been made with recent network upgrades around blob fees, like, we know that the L1 is scaling, but the real path forward is for L2s to be these like unique sort of like cities that live on top of the settlement layer that is L1. So, I think years from now, someone will look at the three of us as like, oh, wow, you guys transacted on Ethereum L1, or they won't even know what that is. They'll just view everything as Ether that's like an L2. So that's been, I think, a challenge in the inflection point of where Ethereum is, going from everything was on L1 in 2020, 2021. Then we see Optimism and Arbitrum launch, and then we see like a base launch and so forth. And, the future is probably thousands, tens of thousands, millions of L2s. I mean, everyone and their mother seems to be launching an L2 now. It's, Base was just like a pioneer in doing this. And there's a pathway there to just an enormous amount of fees being accrued to Ethereum. Now, the key to all of this, though, is like, I can't go into all of like the nuance here, but I would highly recommend, if you go check out the Edge podcast, the-edge.xyz, just look for the podcast with Ryan Berkmans, Berckmans. He's probably the most articulate at like running through the details for like the average person to understand, or even someone who's more advanced in the space. But he really talks about like, how do blob fees ultimately scale with demand for Ethereum? And then how does that translate to value accrual for Ether, the asset? All right, I'll pause there. Nomatic, what are you thinking?
Yeah, I think when it comes to like trying to get conviction around an asset, you have to be able to, like, this is the way I like to think about stuff. You have to be able to extrapolate out growth. Where will it be in the future? And with Ethereum, it got difficult because I think that it was a bit muddied about what the plans were for the future. There was an attitude of almost like anti-winning in a way. There was a lot of mixed messaging. And when we had on the Etherealize guys, Vivek and Danny Ryan, what they were saying kind of just gelled with a lot of the things I was thinking, and it like emboldened me because I was like, yeah, that makes total sense. Like, look at all the stable coins on Ethereum. Look at where just the lion's share of TVL is stored still. So I think like, when I looked at what Solana was doing and what they were selling as their forward looking vision was so easy. It was like, what was it? Increased bandwidth, reduced latency. Like people would just post like IBRL, and I'd be like, oh yeah, okay, well, they're just going to keep being faster and cheaper. That's their plan. When I looked at Ethereum, it was like maybe leaning into more decentralization, but at what cost? And I think what we've seen just again in the last maybe 3 to 6 months is a more cohesive vision of what the future looks like. If you can get a better vision of what the future looks like, I think you can become an investor again in that future. If you can't see the future, if you can't extrapolate success and what it looks like going forward, it's really hard to buy the asset. Like, why would you do that? It's like, if somebody's painting a clear picture of what success looks like, where we're going to be, how we're going to do it, you can get on board with that as an investor. I think that's like one of the easiest kind of ways I can think about what makes somebody go and click buy. So yeah, now Ethereum's doing like that announcement the other day. I think it was called Ethereum Protocol. They're like, we're going to scale the L1, we're going to scale blobs, we're going to make UX better. It was kind of like 3 things. And then the other announcement just the other day too, it's like, oh, hey, we're just going to start using DeFi, and we're going to stop market selling ETH, or maybe they were limit selling. I don't know. But anyways, it's like these things are reassuring. These things make people give people a better picture of where things are going. So yeah, I could rant on and on about this stuff. The last thing I'll
Yeah.
say really quickly is there's this big debate. I don't want to get too into it, but this REV thing and this more like, the argument against, I guess, just Ethereum TVL. I think, but we have this thing in this industry where the pendulum can only go one way, and we get these like binary reaction outcomes that I hate, because like DeFi Dad was saying, there's so much nuance, right? So like, okay, I think maybe a bit of REV is perhaps a good thing, but I don't think you need to throw the baby out with the bathwater and just not look at this mountain of TVL that sits on the Ethereum network and say, oh, well, we can't count that because they're not doing enough transactions. So, and we're not extracting enough MEV. It's like, oh yeah, there's all this money, whatever, 40 billion in Aave, but it's not really moving. So it's not valued. Like, I think that is a nonsensical argument. But anyways, I can get really amped up about this stuff, clearly.
There's one more quick point on this. I think so. Our prevailing theses are all driven from a user standpoint, and I'll call bullshit on just about anyone out there. I mean, like, I admire like a lot of what Blockworks has accomplished, like Jason and Mike, if that's his name. Like they've done a tremendous job. I'm grateful for like what they've done for the industry. Sometimes though, there are folks on that team that they're lost in their ivory tower thinking. They're incredibly intelligent. They put out amazing analysis. They're probably one of the best research firms out there in the industry. Delphi Digital also like have just been a big fan of them for many years. Bankless has put out a tremendous amount of like great content as well. But you know what? At the end of the day, I'll call bullshit on anyone. There's no one using more applications than us and probably a select handful of people in the space. And I learn this constantly because when we have a conversation, you start to realize you're like, these guys aren't using this stuff. Like they're at the surface level on things that are really simple to us as users, but maybe like they've studied like the white paper, or they've again had really like thoughtful discussions and conversations and so forth. So the real edge, think that Richard Chen, who formerly of One Confirmation, and then the partner, the co-founding partner that's still there, Nick, they've always pushed on this thesis that like the real edge is being a user. Actually, Olaf from Polychain has said that since like the beginning of time. I don't know if he still believes this, but being a user, there's just so much edge in this space. That's part of where like our podcast name comes from. So I absolutely miss certain details at times. I'm embarrassed. I can't keep up with enough of all of the new ideas and new concepts. And, I wish, honestly, I was better at waxing on about REV. I feel like that's something that I have. It's a great example of something that I don't think I'm fully caught up on. But my God, there is absolutely no one who's spending more time in these applications, playing with them. And that's a guiding light for us. And I think like that's where we're able to think from a first principle standpoint about what is the market missing? What does it need? It's quick and easy from a DeFi standpoint. We can tell you, is this a product that like the market needs? Absolutely. Athena made sense from day one. Cap, this new stablecoin protocol, makes all the sense in the world to us. We just did a podcast with Upshift. We've had Maple on. Maple, I could have told you 2 years ago, like that they were going to be back at $1 billion in no time. So if anyone is looking for like some quick TLDR in terms of inspiration from all the rambling here, it's get into an application and just start using, just click around. You don't even have to deposit. Like if you can figure it out from just the UI, you're going to learn so much, and you're going to be ahead of some people who are managing some of the largest amounts of money in the space.
Yeah, I agree. I think I've certainly been guilty of that myself at points in the past, even of just thinking, oh, this thing seems kind of silly, and then it catches on, and you actually give it a try, and it's like, okay, well, now I understand why people are actually using this product, as it may be. I remember actually so I up until maybe, 18 months ago, maybe 2 years ago, I wasn't really a user of Solana. And then I actually had maybe a conflicting moment at the time, which was when I did go to use it for the first time. Obviously, it was to buy some stupid meme coin, and my transactions were just failing at this insane rate. Whereas, like, I've never experienced transaction failures at this rate on Ethereum. And obviously, places make different kinds of decisions, but I don't know. I don't know where I was getting with that point. But yes, I agree. The only way to learn is to try things.
No, you make a great point, Ryan. When I heard that Solana was a better user experience, I was already using Camino. I was in MarginFi. I was using Orca. I was using Jupiter. And I was like, guys, my transactions are failing all the time. But then you've got all of the soul bag holders sort of yelling, on crypto Twitter. And I was like, hey, I've lived through this before with like Ethereum L1. So like that's what I mean. Like you end up gaining this insight, and you can really stay ahead of some of the bullshit. There's just a lot of storytelling that goes on. And I think Nomatic made a great point around the pendulum rarely swings in a way that people are ultimately looking at what's going on with a lot of nuance. It just swings one way hard or the other. Solana's the new L1. Everything works. Look at all the meme coins launching on it. Meanwhile, like all these incredible, crazy meme coin launches, like the Trump coin going live is just like, still feels like something that came out of a simulation. When that happened, I knew firsthand, like, I'm like, the whole network's broken. Like none of this works. And again, sure, would it have worked on Ethereum L1 or one of the L2s? That's not my point. My point is that we acted like we had ascended to, the future where everything works like a finely tuned machine. And I'm like, this Solana was reaching like its limits as a network. So, anyways, I have a very long-term view of being a user and investor in this space for many years. And so I think you have to call bullshit where there's bullshit, but you have to also exercise patience for what's being built. And again, this is why, like, even though I've had my frustrations at times with some of these views on like, Solana or like Hyperliquid, everything's possible, everything works. It's all deserving to be priced as X percentage of Ethereum. Meanwhile, Ether's sitting there, and it's just a constant sort of like, it's like a death by 1,000 cuts, in terms of all the criticisms and analysis.
You bring up a great point there about storytelling that I actually would like to kind of get into, which is, there's all of these like alignment, anon accounts and stuff on Twitter, which are very engaging. I have notifications on for some of them. They're so entertaining. And I do feel like there is a lot of points in which I find their criticisms kind of unfair. And as I've been thinking about what I find unfair, it's that a lot of the teams they're criticizing, and granted, there are some times where people do malicious things, super sketchy market maker deals, whatever. But there's also a lot of cases where with crypto, with how fast things get liquid and with the need to tell a story and build a narrative around your project, it feels like recently, especially, there's so many times where the narrative that a founder might be telling just gets so far ahead of where the project is or what the project is today. And if I think back to like the Compound launch, for example, that was a launch with no hype, barely any, storytelling. People really weren't excited until they saw yield farming. But now everything kind of launches with where the story is just painting this $10 billion picture. And reality is a chain with $10 million of TVL or a chain that's not even live. And that mismatch, I think, is one of the biggest problems I see in the market today, where the story is just so far ahead than the progress.
Plume is a great example for me. I think like they've got a grand vision that I'm willing to be patient around, but like, are we kidding? Like, this is a chain that, it isn't live. It's got a token that's trading in the billions. And I actually think I'm very open to being like proven wrong on this, because they have an incredible BD team. Like, they're incredible storytellers. The point of all of these institutions coming on chain with RWAs, like wanting that exposure, is it has to be defensible. They have to be able to ultimately defend them coming on chain to their own investors. And so you need an extremely reliable, uncensorable network that they can have, near certainty in being able to access those assets reliably at all times, 24/7. L1 is that. There's nothing else that touches it. Now, if someone was pushing this with an L2, I'd be criticizing them the same way, saying, yeah, like, absolutely, do your thing, build the business case for this, get folks on board. But I personally, if I was, managing hundreds of millions of dollars, like, I'm not signing myself up for that shit. Like, unless I've got someone willing to insure me bringing that money on chain. So, I look at something like a Plume, and I think, like, this just doesn't make any sense to me. Like, from a first principle standpoint, like, this is not like, this is something that it like needs to prove itself out. But like, who's going to put their money in there first? And I can tell you who's going to do it. It's the big investors that got into the round at an extremely generous valuation. They're going to put up their money and try to create the flywheel, and they're going to do, deals behind closed doors as all of the protocols, end up doing, to try to create a story around TVL building. Nah, I'm kind of, waiting in the wings for this to be proven wrong, but it doesn't make sense to me from a user and investor standpoint.
Chris, Ivy from the Plume team, if you guys are listening, well, maybe we'll have you on the pod sometime too. But Plume actually is a really great example because, again, Chris, Ivy, if you're listening, love you guys. I would agree. I think that is a chain where the hype is so high, right? And the valuation kind of reflects that as well, where they're trading. And I would ask you guys, have you guys heard of the chain Kinto? Kinto?
No, I haven't. But yeah, what is it?
I think so.
So Kinto is a chain like Plume, like they are or were, still are, an RWA chain that kind of came out a little bit before Plume announced themselves. And I think they took a much quieter approach to more like we're going to try and show rather than tell. They don't have a ton of TVL today. They do have some TVL though. It's an Arbitrum Orbit chain, but they have a market cap of like $40 million. Again, it's one of these really challenging cases, I would say, where I think Plume has done a lot more things right, to be fair as well. But also yes, I mean, I imagine that the Apollos of the world and people who are involved with Plume today probably don't get as involved without that sort of grand story that maybe gets ahead of where traction is today. And again, it's like in traditional venture, fine, that's what everybody does. But it's the element of the token getting involved that I think is just so tricky in that having the story get ahead of where you are today.
No one's risking millions of dollars to earn 5% interest, 10%, even 20% interest. That's the problem. This is true of like all chains. Like, to your point, the incentive that comes into play is some sort of like new token, something that can be like speculated on, and see it go up like a hex with it. So, and it has been done before, and it will be done again. There will be other networks that like achieve this. I mean, for what it's worth, I think the cult around for what criticisms I just made about Plume, there's an incredible cult around it. I mean, cult in like a very positive way. So like, let's wait and see. I think it's important for us as a community, DeFi users, to call bullshit on things and remind us that like, hey, it's not that like every idea will work. Like, there's just a lot here that's going to fall flat. Yeah. Got to kind of see where it goes. Again, as a user, I'll be guided to like, where are the best yields? Where am I most confident in being able to retrieve my liquidity? Where are the best builders? And there's a lot to look forward to outside of Ethereum and L2s and Solana and Hyperliquid, like, which again are commanding most of my attention at this point.
I'd like to transition the convo a bit over to kind of the DeFi side of things. And maybe I'll start with a bit of a leading question, see if you guys kind of agree with this. But obviously there was DeFi 1.0, the compounds, synthetics, Uniswaps, original DYDX, all that great stuff that kind of kicked us off in the 2020 time period. Obviously Aave as well. Then there was maybe kind of a head fake around DeFi 2.0. And it feels like that didn't really stick. And now maybe we're in, you can call it DeFi 3.0 or the real DeFi 2.0. And as I've been thinking about this, I'm kind of defining this current wave a bit by like modularity, especially within lending protocols, and then really the introduction of the Curator model. So I think this was pioneered by Morpho. Obviously, you've now seen it in Euler, even protocols like IPOR. Right? Everyone is sort of introducing this concept of a curator, sort of these risk managers, asset managers on top of the protocol. And it feels like this is now the next kind of wave of DeFi. Would you agree with some of that? Are there other things that you guys are thinking of? Maybe Nomatic, I'll kick it over to you first.
Yeah, I think you called out some good ones. Two that I would add is, and I brought this up on a recent podcast with, I don't know if it was Upshift or our recent one with Spark, but so looking back to those promises from kind of that DeFi 1.0 and early DeFi 2.0, some of the promises were composability and like, this vision of money Legos. And I think we tried and failed back then in part because, code bases still weren't strong enough. We were getting hacked. We were getting exploited. So it was a lot harder to have that composability in DeFi. And what you saw is a lot of DeFi protocols siloed again after that and in this like interim period. And what I see now, though, with what you're talking about with this like modular curator model is I think we've got to a point where we can bring back with confidence composability and money Legos. So what I mean by that is protocols can work together again, which was always one of my like what I thought would be one of the biggest unlocks for DeFi over TradFi, that this interoperability, I'll never be able to say that word, can actually happen on DeFi rails. And what that means is just better yields, more creative product offerings. Like you're seeing teams like, Maple, Morpho, like all the biggest teams now lean into composability. And I think it's so cool. And I just think we're at a place, we've matured as an ecosystem where, I still think there's like some kind of like subjective, qualitative way how we dictate who's safe. It's like, oh, they haven't been hacked for 3 years, they're good. Like, or like, I mean, some of the auditors I think have gained, they're reputable. So that's another thing. But we've just gotten to the point where people are okay with doing that. And I think the benefit is the users. So maybe I'll let touch on your point about what was curators and what was the modularity aspect.
Yes, exactly.
Yeah. So from a curation standpoint, or this like modularity standpoint, I think these are just words that tell us that DeFi is allowing for specialization. And so those curators play a very important role. I mean, Morpho has been one of the most transformative protocols this cycle. I remember reviewing Morpho and Euler from like a curator standpoint and just thinking like, how does this model like really work? Like, I feel like these guys are then supposed to do a lot of like BD marketing in order to get liquidity flowing into these vaults. And by the way, there's also probably too some questions of like how much of the collateral that's being borrowed against is that of like the curators themselves. Like I think there's just like a lot of musical chairs with that liquidity. Probably is less of a rosy picture than people realize. A lot of players in the space that are doing extremely well right now and have vaults and curated like strategies across lots of different protocols. It's a sign of the industry maturing. It reflects traditional finance. It allows for multiple players with clear incentives to work together. So it makes all the sense in the world. I'm so happy for the likes of Morpho. They had such a radical vision to do that. They wanted to evolve beyond the money market approach of like an Aave. So that's been remarkable to watch. I want to call out that like in DeFi 1.0, those protocols just kind of owned responsibility across every imaginable like role. And so it was difficult, to be creating new strategies, but also be responsible for an underlying protocol that could be potentially exploited. I think there's one other that's like really top of mind. Maybe it's like tangential to like what we're talking about with the specialization. It probably goes against the grain of everything I just said. So we just interviewed Spark, Sam McPherson, the CEO of Phoenix Labs. And I know, Ryan, you had him on this podcast recently.
Yep.
I think the remarkable story there is that they, as this like lending borrowing application, like a sub DAO of Maker, they basically went out and almost acted as this like marketing and BD arm of Maker, now Sky. And they created a product that looks a lot like Aave. And so they got folks borrowing against multiple types of collateral, which created demand for borrowing DAI and now SUSDS or USDS. So that's been really interesting to watch. But the most interesting part of their story is that they are owning all these responsibilities now as an on-chain capital allocator. I think they have like 3.5 billion as of at least the past week. They have 3.5 billion in this Spark liquidity layer, and they are actively lending all of that liquidity out across like the biggest protocols in DeFi. We're talking like hundreds of millions of dollars. I think it was like 800 million to BlackRock Biddle, 600 million to Athena. I'm forgetting a few others here, like Fluid and Aave and so forth. But they're doing that. It's kind of like the DeFi 1.0 vision for me, where I believed that a DAO would ultimately be able to mirror like the most complex organizations in TradFi. And so maybe they're one that's actually proving that there still is an approach for all of this to be in-house. Just a remarkable story. I still like, it's so fresh in my mind as I applaud the curators in the space, like the RE7s, the MEV Capitals and so forth. Like, have really done a great job of leaning into this new frontier on chain. Like, kudos to them. I'm sure they're sleeping well at night. Spark has like just a radical story of continuing to do it all in house and like really believing in a maximally uncensorable system that, is operated through like a tokenized governance, but obviously has a tremendous amount of leadership and operations taken on by core contributors. So anyways, fascinating stuff.
Yeah, well, you bring up an interesting point there about the sort of original lending protocols, kind of everything within one team or several teams, maybe in the case of Aave today. And I remember, I guess the role in the market that I kind of see the curators through Morpho and Euler playing today is, I remember looking at Compound a while ago after kind of the core team had left and it was mostly Gauntlet kind of stewarding the protocol, and having the thought to myself of, why wouldn't Gauntlet just go and launch their own lending protocol? They're not getting compensated as they would if they started one. Like, they're getting paid a high but nominal amount by Compound to kind of do this today. And it feels like the curator roles have kind of filled that void, where now for the Gauntlets and the RE7s and the Steakhouses and the MEV Capitals of the world, they can go to a Morpho, an Euler, wherever, and they can effectively start their own business, like their own sort of business, without the overhead of having to manage a protocol and everything that's sort of entailed within that. So I find that piece really interesting. Then from the other side too, from the place of a Morpho or Euler, it's like you're getting some of the most capable teams in crypto to grow your protocol because they have this very direct incentive that they can earn a fee by what they bring to their pools. So almost like this distributed BD is something I'm incredibly envious of. I mean, it seems to work wonderful. I mean, frankly, if you even think back to kind of Maple with the pool delegate model they used to have, it was kind of the same thing. You had the Maven 11s of the world, and I forget the other group, but that really is a powerful kind of concept.
Great point. Yeah, Maple's another one to call out. They were pioneers of it, and they have like come back from the ashes and now are, thriving. I think like the major tweak there was going to over collateralized loans again. And I think at some point we'll unlock unsecured loans better on chain. Another one I won't wax on about is just Aave. Aave's another one like Spark, where you're like, wow, these guys continue to own so much responsibility in-house, and they are just so damn good at balancing the need to be a predictable, reliable protocol that doesn't make radical changes that put people's money at risk, but also to make the incremental improvements necessary for their product to evolve and for us as users to benefit from it. So Aave just released that umbrella staking module, and so now they've got double-digit yields, I think, on USDC to be able to earn there, and a few other assets. And I think Ether was basically double what you could get just by lending. I think their lending rate is always like between 2 to 4%, depending on how hot the market is. And now it's closer to 6%. So, I mean, these are details and stories that if you are digging into them, if you are paying attention, if you're listening to this podcast, listening to the Edge podcast, reading our newsletters, like, you really gain a sort of like appreciation, like a childlike curiosity in it. And that's why, like, when I see the nihilistic cynicism like on crypto Twitter, I'm just like, what is wrong with this algorithm or with this community? Like, there's so much to be excited about and proud of. Like, just ignore all of the bullshit, stop following the people that are shilling you nonstop, like, threat of meme coins or pushing out recommendations and endorsements without disclosing the fact that they're investors. Like, these are like really simple sorts of things that like we adhere to. I just, to Nomatic's point, eternal optimist, couldn't be prouder to be in this space, couldn't be more bullish. Like, we are still so early, and 100 billion in DeFi TVL across all these different networks. Like, that's a joke. Like, we're going to have trillions of dollars in a matter of years. Like, there are protocols and teams that are working hand in hand now with institutional investors, folks that literally are managing trillions of dollars, and they want exposure on chain. They see the promise of it. And now that, Gary Gensler's ass is kicked to the curb and they're out of power, the final headwind there is out of our way. Like, now we can know that we don't need to like fear crypto. Like, it can be a uniting force, a technology that improves upon what's there in traditional finance.
Yeah, and I think about something like Umbrella, and by the way, we're working on integrating that into vaults. I think about that, and it's interesting because it's almost like a junior tranche on some of these Aave pools. It is kind of a junior tranche on some of these pools of a protocol that has never had significant bad debt in my knowledge. So it's a very interesting product. I'm actually curious where the APYs will net out in a week or two once people really start to fully understand it. But I'm very excited by that all the same. So I guess coming back around to Aave, kind of DeFi as a whole. Yesterday, I was just taking a look at the CoinGecko homepage, which for some could be a painful homepage at times. And I sorted it by market cap and I sorted it by FDV. By FDV, there's no DeFi coin in the top 20. Actually, same for market cap. There's no, by market cap either, DeFi coin in the top 20. The highest FDV coin that you could maybe call a DeFi coin is Ondo, which I think had an FDV of 7.7 billion. And then the highest coin by market cap is Aave, which I think had a market cap of 3.5, maybe almost 4 billion. How does that change? How does Aave get back to the all-time high, become the $10 billion market cap coin? How do we get the Morphos and Uniswaps and MKR/Skies in there? What needs to change either in how investors think about these assets? We talked earlier about cash flows, revenue, things that obviously they should be valued on. What needs to change in your minds? Like, how do we get these DeFi coins into the top 20?
Nomatic, you want to go first?
Yeah, I mean, okay, big question. I could probably go on with this one. A ton of things. So I think we need a lot more capital to come into DeFi. And then I think that's going to happen. Like, if you asked me a year ago, did I think all of finance would come on chain? Probably not as high conviction, but I mean, it's really hard when you get guys like Larry Fink coming out of the woodwork and being like, I want to tokenize everything. I want to tokenize my dog. I want to tokenize my house. Like, you know what I mean? So, one of the biggest capital allocators in the world, just basically, anointing your industry and saying, hey, this is legitimate. So I think that has to happen, and it is happening. Capital coming on chain. I think so. I'll take a little tangent here. Felipe from Thea, he did a talk recently. I don't know what the talk was called. It was like Lemon Markets or something, but very good talk. And this kind of goes to fundamentals. I think the Uniswap Labs thing, he makes the example of that in that talk, is there's been a dislocation between the value of owning the token and the value of owning the equity, and both are in kind of direct opposition of one another. So I think as an industry, we got to move towards clearer, just like value accrual mechanisms. So hey, you're talking about tokens on a list on CoinGecko. Why would I want to buy any of them? Well, do any of them generate revenues? Does any of that revenue pass through to me, the holder? Tokens have so many superpowers that we haven't unlocked yet. We've talked about this on our podcast with Miles Jennings from A16Z Crypto. Tokens were created by lawyers over the past 3 to 4 years, 5 years, whatever. And I think nothing against the lawyers. I think they did an incredible job to even be able to get us to launch tokens that could do some things, but there's a ton of superpowers yet to be unlocked. And we just need a lot more clear disclosures from founders, from regulators that can allow us to unlock that. So that's one major component. Hey, is the thing you're actually buying worth anything? The other comment I'll make is we went through this crazy period of VC maybe overspending, and it was in a lot of infra, and we have a massive overhang of tokens that are coming to the market over the next 18 months, even, almost indefinitely. And we as an industry have to weed out, basically a lot of teams, unfortunately, need to get carried out to the woodshed that aren't productive or valuable. If you've just created something, useless to launch a token, the market needs to correct that for you. So there's so many instances of that, right? So we need to get through all that. And then we need to, there's this whole fundamentals versus meme coin stuff. There's this race for attention and all the stuff we've kind of been circling around. There's so many, and I don't want to call them distractions, because sure, some people are into that. That is not that's not what I'm pursuing as an investor. I want to be buying stuff for the long term with fundamentals driven backing. But there's so many vesting overhangs to get through. There's so many ways you can draw your attention that hey, the people actually building merit-based stuff are hard to be seen. Again, over the long haul, I think those will, the cream rises to the top. And I think that'll happen. But it also depends on your lens of how forward looking you're expecting these things to happen and your time horizon. Because hey, this industry of DeFi tokens, I mean, it's really about 5 years old, give or take, right? The tokens have been in the market. That is not that long, and I probably operate on more of a 3 to 5 year time horizon. So you just have to give a lot of this stuff time. So I think those are kind of a few of the key things that I see need to happen. Like tokens that do have fundamentals, make it clear to the buyer, the investor. Tons of VC overhang garbage needs to get hauled out to the woodshed. And then this attention, meme stuff, I don't know. Like, I mean, that's just there also, like that draws in so much capital. So there's just like a lot of things really.
But you raise an excellent point. Oh, I was just going to chime one thing. You raise an excellent point about some of the legal and regulatory stuff. You mentioned you had Miles on your podcast from A16Z. I think they just published a blog post the other day about like, we need to kill the foundations. And I do agree that I think that these foundations, which have been this kind of offshore regulatory shield, do wind up just becoming this kind of like bloat of an organization where, at the end of the day, you're right. These things are very new. They're 5 years old in like the max case, pretty much. They're still early stage startups. And the idea that they have all of these like levels and foundations and just overhead to get through to make what should be quick decisions certainly is a drag both on productivity, but then also to your point about revenues getting distributed back to token holders.
Yeah, I think you guys have covered nearly everything. I just want to clarify, Ryan, were you saying you were looking through like the top 100 coins by market cap or FDV on CoinGecko, and you were saying like you just don't see a lot of DeFi tokens in there, right?
Top 20 specifically, yes. Top 100 is a little bit better. Top 100 is a little bit better.
Yeah, top 100. Okay, I appreciate, I think everything that you both covered, total agreement there. I think, lawyers were designing tokenomics for years. It wasn't their plan, but just they were tasked with serving their clients, and their clients needed help creating protocol designs or like token designs, tokenomics that allowed them
out
to
of jail. Yeah.
Keep them out of jail. Yeah, exactly. And that's a total failing of Gary Gensler. I mean, he deserves the absolute worst, and I hope he fucking trips on a sidewalk today. Anyways, when I look at the top tokens, I actually have a more optimistic view on this. So maybe I'm being a little bit generous, but I see DeFi as the driving force behind so much of this. And like, for example, obviously you have Ethereum, like let's call it the number one settlement layer for DeFi. Even XRP has ascended to a place where the community is pushing for DeFi. They're pushing to create DeFi there, which like could have just been labeled as an L1, a meme coin here in this instance. You have BNB, you've got Solana, of course, synonymous with it, Hyperliquid, Sui. These are all ecosystems that are built to serve DeFi use cases. And that's really exciting to me. Also, too, I see a lot of like the major DeFi assets that are the most pristine collateral, like Lido staked Ether, like wrapped Bitcoin still is up there. And I know CBBTC is maybe not in top 20, but I imagine Coinbase is going to keep rising. So I've got a much more like optimistic view on this, that like the market has clearly signaled that DeFi is the ultimate product market fit. And, as much as I don't look down upon, we talked about meme coins earlier. Meme coins to me are an example of, the financial freedom to trade whatever you want. Like, and I'm all for that. I love that. I just, it's like if you go and trade penny stocks, like be prepared to be hurt, more often than not. And, I want to see more positive sum applications, which is why we focus on the likes of Aave and Fluid, or I think Athena being this tokenized programmatic trade, like that's an incredible unlock this market cycle, to see something like Athena grow to billions, because that was a trade that so many of us frankly just aren't capable of pulling off reliably. Like there might be a lot of money out there. There's enough folks with enough money to pull it off. But what's so amazing about DeFi is that anyone, whether you've got $1 or whether you've got hundreds of millions of dollars, you have access to the same tools. You have access to the same yields. It's just a matter of how much capital do you have to put to work. Like that to me is indicative of a more fair world. And, we're probably in the part of the adoption cycle for crypto where I do wholly believe that the next like major wave that we're in here is big money coming on chain. Like we're going to see TradFi really leaning hard into this. I was hoping that retail could benefit from this sooner, and to be fair, they are able to, but we still have issues with just like reliable internet access across the world, who has access to the right devices. I think there's a very prevalent across all of like DeFi apps. A lot of them are built for you to access on a desktop, but then you have actually to give a shout out to I know Tron has really leaned into that. People beat them up for all sorts of reasons, and I'm not a TRX holder or a follower of His Excellency, but I have a lot of respect for the fact that like there's been an intent to really lean into mobile friendly DeFi, and that's a big unlock for lots of folks who have some sort of like mobile device that would give them earlier access in parts of the world where, maybe it's a developing country where they're getting some access then to the types of smartphones that are necessary to get exposure there. So anyways, I couldn't be more optimistic that like DeFi is going to continue to grow here. And I really see a repricing happening here. It's the overhang Nomatic alluded to. Just there's a lot that needs to be taken out to the woodshed. And I do see also VCs. We know angels and VCs in the space are really pushing for better applications. Actually, as much as Ethereum has really leaned into that heavily, I think there's a lot of credit due to Solana for pushing on that and making that a priority, better applications, and having that influence on Ethereum. So, this is why I'm long all these different assets.
No doubt. No doubt on that. Now, I guess as we're approaching the end of the episode here, I'd like to take maybe a bit of a kind of future focus of where things are going. You talk on some of these trends. I'm also, praying every night for a repricing of DeFi assets. We're all hoping for that, I think. What else are you sort of betting on kind of through the second half of the year? I've seen you guys talking a lot about liquid tokens and some of the exciting opportunities that you see there. Are there other mechanisms, trends, specific protocols that are really getting you guys excited?
Nomatic, do you want to go first on that?
Yeah, I was actually just pulling up my spreadsheet of what I've invested in recently because I feel like that kind of is the best indicator of what we're looking at and where we're going.
Yeah, where are you putting your money?
I would say, hold on one sec as I pull it up here. Okay, I got it right now. So a lot of stuff that we've been looking at is very much, probably unsurprisingly, tied to stablecoins and in the realm of yield-bearing stablecoins. It's obviously a booming sector right now. I maybe won't like mention a ton of names, but I just think that's such an interesting design space to explore. And I mean, it can be one of those like meritocracy things, like why we thought Athena was going to be successful is because really high yields. I mean, that's an easy story to tell. And like, I think we were worried about, are these risk adjusted yields though at the time? Some of the like how funds were managed was a little bit worrisome. So ultimately, like, where are new sources of yields coming into the DeFi space? So new mechanism design is really interesting, I think, to both of us. Like, somebody has figured out a new way to bring sort of off-chain yields on-chain, or even vice versa. Like, I'll name like maybe just a few. So a recent investment of ours, Infinify, they're highly composable with DeFi, and they can essentially take any yield, add a duration, basically like tranche it out and create better yield. So I think like that's stuff that will win out. Another one we mentioned earlier was Cap. Just super interested with that design space that they're working in. They've attracted the likes of like Susquehanna, Franklin Templeton to kind of work with them on that new substrate that they've built to again bring new and interesting yields to DeFi, and all backed by a stable coin. Another one, I said I wasn't going to mention names, but Gaib is really interesting too. They're basically tokenizing GPU compute and passing a lot of the upside of those GPU deals, those cloud deals, onto users that hold the stable coin. So that's kind of like a wonky one, like that's in private credit, but also giving you AI exposure, and then wrapping it up in a stable coin with yield. And don't get me wrong, I am risk averse, and like a lot of these are risky. So, do your own due diligence. There's a lot of ways these things could go wrong, but we're in DeFi because we get excited by these things, and we like to see teams kind of pushing the envelope forward. Lastly, I'll just say one more. Again, said I was going to say no names, but here I am. A really cool one, 3Jane. We invested in that as well. So this is basically trying to crack this nut of how do we allow credit to happen on chain? Like, how do you issue credit to people you don't really know? And they've done this really interesting link. I think one of the best use cases of ZK Tech is like, hey, look, how do we take private information from off chain, but use it on chain without disclosing too much between that connection? So they're using like ZK TLS to look into your credit score off chain, get an idea of what that looks like, you as a person on chain, and take your on chain credit score and wrap that into an algorithm that they can say, look, here's our picture of this person. They're also tied into like collections people as well. Like it's pretty crazy. But I do think that is something that is a risky primitive that can supercharge DeFi. That's one of those things that, look, if you can create credit, you can expand the pie of DeFi. So yeah, those that's like a little snapshot of stuff that DeFi Dad and I have been really interested in. And we kind of co-invest in all this stuff together as angels.
Yeah, I can double down on just a few details there too. So obviously, stablecoins is an enormous sector. Like I think coin related tokens, could easily command like a multi-trillion-dollar market cap in the future. We feel like there's a lot of people, the entire market is underestimating how much bigger that gets. It's funny because it's the most talked about narrative in the space, but we know there's a crossover there to the mainstream, and that there's going to be lots of different stablecoin yields that are actually powering Web 2 like applications. So, if you can imagine your buddy, downloading an app and saying like, yeah, I'm earning like 4.5%. It's with T-bill yield, but really it's underpinned by T-bill yield plus some like lending on chain with like a tokenized T-bill. Like there's just all sorts of amazing opportunities there. And Infinify is really interesting for trying to amplify yields by using basically it's fractional reserve banking, where they've got two different tranches. One of the folks are locked up for longer, and so they're putting up capital that they can put into more competitive long-term yields, something like a PT on Pendle versus other stuff like Fluid lending USDC or Aave, where they need to be able to retrieve that liquidity at any point in time in case someone wants to get their money back. Just literally posted about this today too, there's a tie with Gaib. Gaib being a yield-bearing asset, a synthetic dollar that is used to finance GPUs. One of the reasons we invested there is because I want exposure to the upside on AI, but I don't want to have to return back to traditional finance and go like invest in, well, actually, I would love to invest in like humanoid robots, but like those deals, let's be clear, like I just don't have access to that kind of deal flow. And although like we are getting into private rounds as investors, this is one of the few places where a token can launch, at an early stage and be worth tens of millions, but truthfully be worth that much more in the future, billions of dollars. So there's asymmetric upside that you can actually achieve in this space. And it all goes back to DeFi. So for me with Gaib, it was like, how do I get exposure to the upside for the demand on AI? And we were just so excited to learn about this. It's like, this is a mechanism that makes sense. It's going to allow better coordination in terms of financing GPUs and folks that want to access that money, that credit, private credit, like checks the boxes on lots of different narratives. But again, I'm a user. I'm looking at it as like, how does this thing work? Does it make sense? It absolutely does. I know it does because we use these yield-bearing assets all the time, and it's a new use of those yield-bearing assets to finance these GPUs. And then we talked about specialization earlier. This is something I think that like really again caught me by surprise. I don't think I've done a great job this cycle or any time leading up to it of foreseeing that. Like Morpho again was like, gosh, like why didn't I at some point, try to get into Morpho or try to like, I don't know, get a check-in at some point or just, farm it like others would. So one of the best investments I think we've made, we're very grateful to have invested in Cap, because Cap is hyper-focused on being like this base layer for pooling stable coins and then basically coordinating, having an incentive structure where let's call them curators or yield earning specialists, folks like Susquehanna, folks like Fidelity, folks like RE7 or MEV Capital, I'm sure will be in there, like the more like DeFi native teams that are running vaults. Those folks are going to be able to access an enormous pool of stable coins, borrow from it, go earn yields, and then I believe the best way to describe this is that there's like a backstop there through EigenLayer to, it's a dirty word, but let's say they're insuring against the fact that like there could be an exploit at some point, but they're working with really reputable players. So again, idea of like a base layer that is going to be uncensorable, focus on being the morpho of this like new sort of like stable coin earning approach, and then let some of the most sophisticated actors on planet Earth go out and earn stablecoin yield on behalf of the cap CUSD holders. So like, I'm just like blown away at the fact that like there's going to be, who knows, like a BlackRock that comes on board and is literally borrowing from this like mega pool of stable coins and then working their butts off to earn this hurdle rate. Let's say it's like 7 to 8 to 9%, I think is like the target, according to like the founder who we had on the Edge podcast. They're working towards that because they're going to keep what's extra, beyond that. And so anyways, I don't know. When you listen to us, I think it's abundantly clear, like, I didn't work in traditional finance. I am very well aware that I have my blind spots. I'm ignorant to a lot that's been built out there. I mean, I do my best to continually learn, and I really feel like I'm always behind where I really want to be in terms of my knowledge, my working knowledge of the history of finance. But the place I really lean in is damn well know what works on chain because I've experienced it. I've experienced the upside, the losses. I understand what some of these major players are going to face. They're just going to have a different lens, a different perspective coming from traditional finance. But anyways, welcome to the jungle when they get here, because it's a wild place on chain.
One thing I just want to quickly add, if we have enough time. So sort of like a theme I think DeFi Dad and I started hitting onto relatively early was we definitely got away from infrastructure investing and we started investing in the app layer. So that's like another theme of this, because again, we come at it as users and you just step back and look, where is the value accruing now? It's like accruing to these apps that are like, they're the ones that are drawing in the users. And of course, like layer ones are as well, but that's still kind of like a bit of a race to zero on fees. So I'd say we came by it by luck that we started investing in some of these good app teams just because that's what we're used to. And we know DeFi and that's where we're most comfortable. And that's like our wheelhouse. So, all the talk about it was the fat protocol thesis forever. And that reigned supreme for a long time. And, we've started hearing about the fat app thesis, and now even the fat wallet thesis is like a whole nother, there's tons of theses. But I do think that it's kind of time for the app layer. So that's like the other kind of through line theme, I think, of our recent investing pattern. And it honestly, like, it happened sort of by accident just because we're like using the things and these are the things we like.
I would encourage anyone who, is searching for liquid tokens on chain. Like there's teams here that, we invested in, or one of us invested in. A lot of these have live tokens. Like, for example, I invested in Parcel, being able to trade tokenized real estate on Solana. If you are not able to quickly summarize the value of what these folks are providing and to like understand from a user standpoint why this is something they could not live without, I mean, that's a pretty effective criteria for determining whether you should be spending any time on this, paying any attention, putting any money into it. And some of these they just need that much more time to work themselves out. Like, investing in Athena, we feel like, just like the luckiest people in the world that we invested in Athena, because the market did recognize how incredibly valuable they are as a protocol. Meanwhile, I don't know where Parcel is today, but like, I think Parcel is probably around like, let's say 100 million. I think the last time I checked, around like 10 cents. Parcel is a radically unique use of DeFi. Like, I would have used Parcel years ago before we had bought our first home, having like a single family home. I couldn't get exposure to real estate. And again, I guess there was other tools there that I could have accessed through TradFi, maybe using like REITs and things like that. But with Parcel, like it's just so much simpler because you can bet on specific housing markets, you can bet on rental markets, and like that's the sort of stuff that I think we get so excited as users. We probably over index at times on that. And like, that's why we have, don't worry, we have tons of zeros and huge screw ups along the way. Lots of war stories to tell, but I'm very proud of, I'm very proud of like why we invest in teams that, we believe in as a user, and we want our friends and family and others like us to be able to have access to tools that are being developed there on chain. Like TradFi requires you to KYC. You got to jump through certain hurdles. You got to make a certain amount of money to get access to some of like the best opportunities. That's all bullshit. That nothing has changed since 2018, 2019. Like that's still complete bullshit to me. And frankly, like I look forward to putting a number of these big banks out of business with DeFi in the future. Like I really hope that some of Vanguard's not going anywhere, but like they were so negative on crypto for so many years. And like, yeah, like good luck. Good luck. Cause like, we're going to absolutely eat your lunch. Vanguard's going to be like the mom and pop that got put out of business because Amazon in the early 2000s like ate up so much of their market share. And everything I'm saying there probably sounds radical and nuts to be thinking that, but I'm telling you, there will be some enormous names that you'll say, what the hell happened? And then meanwhile, the likes of BlackRock, who really leaned into the space, are going to do well. So anyways, if you're looking for opportunities in the market, look at it through the lens of a user. One token that we're both exposed to, and again, none of this financial advice, is Fluid. We feel really strongly about Fluid. We feel like it was one of the most real innovations this cycle with what they call smart debt and smart collateral, turning your debt into a passive liquidity type provision, earning trading fees basically for being willing to have debt denominated in like USDC or Tether. These were incredible unlocks, and they've made DeFi a better place, and they're positive sum. And I think Fluid is incredibly mispriced right now at like 500 million, given what they're building towards.
I think there's several cases like that still in the liquid market. I also have Fluid exposure. I had DeFi Made Here on the podcast, DMH, on a while ago. Should have bought at that exact moment. I think it was like maybe $2 or something.
He's the best, yeah. What an incredible storyteller. Huge part of the reason they've done so well too.
Totally. And Euler too. I mean, Euler to me feels just significantly mispriced, just having launched Euler Swap. Obviously, nothing we say here is financial advice, blah, blah, blah. But yeah, so guys, I've had a great time having you both on today. Thank you for actually hanging out for like 2 hours now. As you know, we chatted a bit before we hopped on. I think two things will be abundantly clear to anyone who listens to this episode. One, DeFi is the thing. It is the through line of crypto today, and it is what people are so excited about. And two is that I think anyone listening should feel very lucky to work with you guys. You both are very optimistic about the space. You use products, and I think the excitement comes through in everything that you guys say. So as we're wrapping up, please direct people to where they should learn more, find more about you guys, how they can get in contact, all that stuff.
Yeah, no, thank you, Ryan.
Oh, sorry.
No, please don't.
DeFi Dad do the where to find us. He's the expert at that. But I just want to say thank you. Thanks for having us, Ryan. This was a blast to kind of actually answer the questions. But yeah, thanks, man.
Yeah, it was nice switching the mic. You guys are on the other side of the mic this time.
Yeah, total privilege to be on here. And make sure folks go to vaults.fyi. We are constantly spotlighting all of the opportunities that are available there. Because I mean, ultimately, like that's what you guys are like. One of the ultimate curation platforms for getting easy one-click access to some of the best DeFi yields. So best place to go to get access to our content, which is all free. Nothing is gated. The worst thing you have to do is just put in an email. You can put in a fake email if you want, whatever. You go to the-edge.xyz. And then if you go to Linktree, it's edge_pod. You can follow edge_pod on Twitter. And then, yeah, we've got the Edge podcast on YouTube, Apple, Spotify, and X. And just like love for folks to reach out if you are a builder, of course. Like we're always interested as an investor, but I don't know if this is clear on the outside. We do not take paid guest slots. So everything comes from a standpoint of like curation above all else. Of course, some of our guests are folks that we've invested in, and we're very crystal clear in our disclosures when we've invested. If you check the show notes, we specifically put in not just that we're invested, we even try to call out what year and like what round we would have invested in if we invested in a private round. But we are absolute allies and friends to like anyone who's building something valuable on chain and believes in this like future of DeFi being a uniting force. Like, please reach out. We'll do our best to be allies to anyone who's doing good work out there.
All right. Once again, thank you guys. For anyone listening, please subscribe, share with your friends. That's how we grow, get more guests on. So thanks again, and talk soon.